Welcome back. I'm back. Hey, I needed a couple days off. What can you do? Listen, okay? Yeah, I know Jerome Powell's speaking today. We'll get to that maybe tomorrow on the program. I can't sit and watch the entire thing. I'm going to have to go through the entire testimony. I want to talk to Simpsons right now. That's right. I again popped into my head an episode from a long time ago. Homer Simpson, always going into his neighbor's garage. Who's his neighbor? Ned Flanders. That's right. Ned, the church-going guy, always doing the right thing by everyone. Homer's always going into his garage and taking tools from his garage, and he doesn't return them. Why am I bringing this up? For years here, I've been explaining to you, I've been explaining to my clients that the Federal Reserve is like Homer Simpson. The Fed is like Homer. At least they've been like Homer, okay? They would go into my garage, grab my toolbox, and steal stuff. And what was the stuff that they stole? Interest rates. That's right. Interest rates. That's what they'd steal. I mean, we build portfolios for people. And the reality of the situation is that stocks, for the long run, make phenomenal investments. We talk about that all the time, about being a good company buyer, not thinking things of stocks. You're investing in companies. But everyone's situation is unique and different. Let me dive into this a little bit more. If you're to tune in to the business programming, what's happening out there today, you've got this bull bear notion, which is bullshit. It is what it is. It's a bunch of nonsense. I watch these portfolio managers come out and, I'm moving to cash right now. I'm raising cash in my portfolios. You're doing what? You're doing what? So you're going to people because you think you can time the market, that you're going to do this because you're going to act like some sort of wizard. You've got some sort of magic crystal ball. You can see into the future. You can't. You can't. You don't know when things are going to turn. What you do is you build portfolios around each and every person's situation. I'm going to give you my situation. It's a good way of presenting it. Taleb talks about that. Tell him what's in your portfolio. All of my retirement savings is 100% in equities. 100% in equities. You want to guess how old I am? I'm getting old. I'm going to be 52 this year. And I don't plan on retiring. I don't. I know at some point in time I'm going to have to, withdraw money, mandatory withdrawals. I get all of that. It's 100%. However, I have other accounts as well. This day my kids are born, putting money away for their college education. For a period of time, that money was invested. That's conservative investment stocks. But as time went along, I've got a sophomore in college right now, 20 years old. Once he hit 16, 17 years old, you got to go to cash. I had to go to cash, even though he had a couple years before he was going to go to college. It was too much of a risk. You don't know what's going to happen. Bad stuff can happen. Black swans can happen. They do. So for that period of time up until now, I wasn't getting any rate of return at all on those cash and cash equivalents. It's the reality of the situation. Now, again, I've got a daughter's going to college next year. I've got a son who's going to be a senior next year. Guess what, guys? Guess what? I'm getting a return on those cash and cash equivalents. I talk about this all the time. Conventional wisdom is poison. It's dangerous. It's what's being pushed upon you. If you've got a competent financial advisor out there, and listen, they should have, okay? They should avoid all temptation to say, oh, gee whiz, we're not getting any return on these cash positions, so we might as well go into stocks. No. The last thing in the world you want to do as a retiree is have to go to your portfolio, look at the companies that are in your portfolio. Oh, what do I got to sell this month to pay the bills? Now, you take a look at this and wow, all of a sudden, gee whiz, I'm getting a return on my cash and cash equivalents. I mentioned this yesterday. I was on Mornings with Maria yesterday. I also mentioned the fact that pensions, that not only have they been taking it on the chin due to just malinvestment and lack of contributions, but also if you're a pension fund, you're a pension fund manager, you have actuarial responsibilities. You have to maintain a large swath of your portfolio in cash and cash equivalents because you got to pay out all the time. Now, traditionally, you'd get some rate of return on that. Not the case. What's the conventional wisdom right now? What's the conventional wisdom right now in regards to the markets? Rates are going up. It's bad for stocks. Okay. I thought about this yesterday. For whatever reason, I don't know if you remember this. Our younger listeners most certainly are not. I'm going back to 1995. 1995, Microsoft had an advertisement with it was for their new operating system. And it had the Rolling Stones song, Start Me Up. Windows 95. I think rates, the average rate 10-year that year is close to 7%. Markets did pretty well. Did pretty well during the 1990s. Take a look. Go online. Take a look at where rates were throughout the 1980s. Now, obviously, earlier part of the 80s, things went a bit parabolic. Again, different time, different place. This is why I can't stand the Paul Volcker comparisons. It's not. What we have right now it's a normalization of rates. These are not high rates. They're not. Granted, if you're a company that has to go to the well, if you're a company that has to go to the well and has to continue to raise cash, or you might have to refinance some of your debt, it's going to hurt. It's going to hurt. There's no doubt about it. But as far as most of corporate America is going to do fine. They adjust. We all adjust. I've talked about that Navy SEAL comment that I heard years ago. It said when you going into battle, Navy SEALs, they've got their map, they've got their plan, and you arrive, they get in on the beach, however they do it, and the map was wrong. The map was wrong. The terrain was different. The intelligence was wrong. What do you do? Do you go with the map? You go with the original plan? Or do you adjust to the terrain? That's all this is. And that's, again, for us, who cares? Because I have a story right here. Retirees lost 23% of their 401k savings in 2022. Again, the headline, right up front, it's a lie. They weren't not just retirees. They were talking about retirement savers, 401ks, IRAs, and all that jazz. They didn't lose anything. They didn't lose anything. Are the positions in my retirement account down over the past year? Yeah. Yeah, I'm still reinvesting, putting money away, I'm collecting dividends, building a base. This is where real money is made for long-term investors when markets come down. Absolutely. Okay, so it's not. Is that necessarily a bad thing if you're a long-term investor? No, but if you are a retiree, again, if you are a retiree and your advisor didn't do a very good job, okay, wasn't disciplined in regards to, I know it sucks, we got to have this portion of your portfolio and cash equivalents, even though we're not yielding anything. I know it sucks. You still got to do it. You still got to do it. Now, again, the terrain has changed. And again, like we always do here on the program, we buck conventional wisdom. We buck conventional wisdom. We're saying, you know what? This is great. This is fantastic. My cash and cash equivalents are going to get a great return. And guess what we decided to do? Get this for everybody. For everybody around the country. Yeah. How about this? You know, no fees, no commissions, no nothing. What can we get you today on T-bills? Was it 4.86%, 5.13 on a 10? Listen, we're doing it for you for free. How's that sound? How's it sound? Again, don't give up. Don't give your bank. The bank's not going to give you what we're going to get you and T-bills. And obviously we can do municipal bonds depending upon the state you're in. Take advantage. Take advantage. All of a sudden, guess what? Your cash and cash equivalents are going to get a nice return. Don't lose out. Get to our website, WatchDog on WallStreet.com. I'm going to have a jump page with this offer up shortly. I don't know if they've put it up yet. It will go up there. If not, again, just sign up for our personal CFO program. We'll get in contact with you and we can give you all of the details. Take advantage. Doesn't cost you a darn thing. WatchDog on WallStreet.com. WatchDog on WallStreet.com.